Right. Welcome to Crypto Waffle episode 13. A very sad day today for many leveraged traders. But today we shall be talking Trump dump, portfolio management, and a DeFi shallow dive. So I think at first we get a bit of talk about what's happened over the last 20.
Why is my portfolio covered in ketchup? Why is it all red? Why does it look like a portion of chips at the minute? What's happening?
Not looking good, is it?
So over the weekend, we had our guy, Donald Trump. He launched that's my phone. He launched a bunch of tariffs against the two nations who are his biggest trading partners, because that's what Trump does. He feels that America's been treated unfairly. But anyway, these tariffs he's launched, he said they come into effect tomorrow unless they can do some sort of deal. And if this happens, it will spook the market, or it has spooked the markets. It will put the price of stuff up. It will probably lead to inflation. It will mean that the Fed can not lower interest rates. It means that all risk assets become less desirable, and crypto is the biggest and riskiest asset of them all. And so we got hammered. This morning or overnight, the Asian markets were trading their Monday because they're ahead of us. Those absolutely pooed the bed, as we like to say. Then the Europeans woke up this morning and they thought, well, wouldn't it be a good idea if we pooed the bed as well? So they did too. And the Americans woke up and they weren't too bad.
Well, it was Sunday night, so Americans, it was happening. Well, this is crypto land, not TradFi, because that was obviously closed.
Yeah.
Where I work nights, it was a perfect opportunity for me to be awake. So in Europe, obviously in the UK, everyone was asleep whilst the worst of it was happening. But obviously Twitter was popping off. Like everyone I follow on Twitter was talking about it. But I mean, the way I look at it, I see this tariff thing as just the headline that caused this liquidation event.
So we had discussed for a number of weeks, we've been saying something has to come for them to switch on the money printer. Something has to come. I think this is probably, if this isn't it, what he did say, which I think is what spooked the markets the most, was the forward guidance where he said, right, I've dealt with Mexico and Canada. And he said, Europe, you're next. Now, it's one thing to try and bully Canada. It's another thing to try and bully Mexico. But Europe is a different beast altogether, because there you've got obviously Germany, you've got France, you've got like a decent sized bunch. And also the Eurozone is notoriously difficult to negotiate with and bargain with, because they've got a bunch of people. They are doing bureaucracy up the yin yang. It will take much longer than 18 months for them to do any kind of tariff deal. So it's not going to happen. It will just be a case of tariffs and counter tariffs. And I think it will descend into chaos, I think.
Yeah. But then again, I mean, it depends how I don't think Europe's their main. I think if anything's to go tits up, it would be China and US. I think that's the bigger tariff game to worry about rather than Europe, in from my point of view.
Yeah.
But then it depends also how you view this tariff stuff. Like, I view the tariff stuff as kind of the carrot and the stick. So the stick is tariffs, obviously, and then you've got the carrot, which is a weaker dollar, lower tariffs and stuff like that. So it's just used. I believe he's using it as a bargaining chip. Now it depends what you want to believe, but I think he's using this to bully people basically into saying that, well, like for Mexico, they've already folded, and now Mexican tariffs are now off the table for another month. Literally within 48 hours of him announcing it, 72 hours. So he's putting out a message to other central banks and higher ups of countries around the world that he's not kidding. When he's talked about tariffs, he means business.
Yeah.
And him then going to do that on, like you say, his two biggest trade partnerships, that just shows to the EU and China as well, he's also not mucking around. I mean, I've got a bookmarked tweet here, which I'll just read out. And it says, this is Donald Trump posting. I spoke with President Claudia of Mexico. It was a very friendly conversation. where she agreed to immediately supply 10,000 Mexican soldiers to the border separating Mexico and the US. These soldiers will be specifically designated to stop the flow of fentanyl and illegal immigrants into our country. We further agreed to immediately pause the anticipated tariffs for a 1-month period during which we will have negotiations headed by blah, 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 blah. I look forward to participating in those negotiations as we attempt to achieve a deal. So he can impose these, and it, at the moment, very quickly, it's just getting kind of kiboshed. So everyone's reacting to this news, but it kind of, I was reading along another tweet yesterday. He did the same in 2017. He was using tariffs as a thing again. And I showed this chart, I think, last week of the dollar compared to now in 2017. As we'll go onto the chart later of the dollar or whenever, but the dollar, since it spiked up to 110, I think last night, it's then dropped back again.
Well, it was dropping before, wasn't it? Right, and then
so that's the other thing. If the consensus trade is a weaker dollar, it's never going to go in a straight line. Why would it go? If everyone's going, all right, dollar's down, right, okay, we can happily go risk on. No, they're going to have these massive spikes to throw people out. But that's how markets work.
So here's the counter argument now. Here's the bear case. Now, Canada have said, get lost in no uncertain terms. They've said, all right, well, we'll do tariffs back and then we'll see what happens. Now, Canada are maybe, I don't know, a tenth of the strength of EU. Now, if EU turn around and they say, okay, you want to do tariffs, we'll do tariffs as well. And they put tariffs on all of the darlings of the American stock market. So they put tariffs on Apple, they put tariffs on Google, they put tariffs on Netflix. They say, all right, Uber is now outlawed. They just say, okay, well, we will cancel Disney, all of these things that America exports. If Europe turn around and say, okay, well, do you know what? We can make our own computers. We're friends with China still. We can do all of that stuff. All right, if that's how America want to be, leave them to it. The chances are Europe will find a lot of allies around the world to still do business with. The majority of the Middle East will be over the moon. This BRICS that has popped up, Brazil, Russia, India, China, Turkey, all of these places will be over the moon. Mexico will be everybody will be over the moon. And overnight, I think the American empire will feel some real strain. Now, I don't think it takes much for Europe to turn around and say that. And because of the way Europe is structured, I think it's going to be almost impossible, because Europe's not going to be able to react the way Mexico have reacted and bend over, or the way that Panama have reacted. I think it is much more of a worry that he decides to carry on the strongman act and pick a fight with somebody who can quite comfortably put him in his place. I think that's more of a worry.
Yeah, I think it is. But then, I mean, the other way I look at it as well is you've got to remember Trump is his biggest portfolio is property, isn't it? And if you've got high interest rates, he's a property man. Like, I know today, obviously, his World Liberty Finance as well. They purchased another, what was it? It's just here. They purchased another 86,000 Ethereum in the last 7 hours. Total holdings are now 421 million in ETH. So he's obviously addressing and still anticipating a pump in these assets, right? He's not going to want to carry on with high interest rates for his properties. He wants to acquire more properties on the side of obviously him being the president, and he's a property guy. And you've got to think of what his kids and that are doing as well, and other family members and businesses. They're all going to be the same thing. He has a personal bias to have interest rates lowered. Like, that is just the way it is.
I don't know how much that matters to the Europeans. I understand that we can gamble on Trump getting his own way, but I don't see the Europeans. I just don't see the Europeans budging for him. I just think they'll just be like, okay, well, we'll talk about how cool he is.
I see them folding because they're not exactly strong. I mean, look at Christine Lagarde. She's not a strong individual. Can you imagine her on the phone with Trump? She'd probably just sit there cowering.
It's not so much about their strength. It's more about their process. And there's the process that will just take too long. Because Trump can't do this for 4 years. Trump's got 2 years.
Yeah.
I think Trump's got 2 years. I'd love it if Europe did fold, but I don't know that they have a way to do that. I don't know that they have the mechanism to just do what someone says. Everything they do takes years.
I mean, because to be fair, in the TradFi world, it hasn't been that big of a sell-off. Like, the Nasdaq only opened up 3% lower, but as of now, on my screen, it's currently only negative 1% for the day. Like, that's not bad. Like, that's general day in TradFi.
In crypto world, it's not bad. TradFi world, we don't have many days where we have 3 or 4% sell-offs. Big stocks like we had, when I checked last, Mercedes was down 3-4%. A lot of the power makers were the ones that were hit the worst, obviously, because they've got to move bits and pieces around. So they're pretty much finished. So they were down quite a lot. I think it's the good thing about TradFi.
It's just been labelled as not a crypto event, but I believe we know how market makers work. They're hunting people with liquidity up or below us, wherever it is. I think they've used this tariff war, whatever you want to call it, as the go ahead to, right, let's go get and look fucking, where did we drop to last night on Bitcoin?
95? Was it maybe 95?
I'll share my screen and then we can do the dollar at the same time.
Yikes, 92. I've got 92 and a half.
Yeah, I mean, we hit a low, 91.5 on this Bitstamp chart. Can you see that, all right? Yeah, so that's where we were. So, but going into the dollar, we've talked about this dollar having 3 drives to the top, peaking out, and we saw this initial rejection, which is what you wanted to see. Now you've got a potential double top of play. Now, today, depending on obviously if anything comes out of Canada and tariffs, or China and tariffs, or whatever news headlines come out, the directional for this, so some of the guys that I follow on YouTube, like technicians, they're saying that any whips in the dollar are to be sold. So if you exclude all news and sentiment, this, if it closes back in below, say 107, that should be going all the way down to 95 in my books. That is a big sell-off. And it's not to say that they can't. But the other thing we've got to remember, if we zoom out on a macro level, is this. They still need to refinance their debts. And they're not going to be doing that with interest rates as high as they are.
No.
They can't do it.
But the thing is, the people that he's negotiating with, surely they know this.
They're for their own debts to refinance. So globally, ideally, everyone needs lower interest rates. Like,
do you know, I tell you what this is good about this conversation is that everybody's got their own take.
Yeah.
And it's always good, and this is something that I like to do, so this is a little nugget of advice. It's always good for people to discuss these situations with other people who are in the know, especially with people who have got a different idea on things. Because you get your eyes open to different things, and obviously you've got to be flexible. You get your eyes open to different things, and it increases your understanding and your ability probably to read the situation.
Because when did Trump last come in? Was it 2017, wasn't it?
I thought it was 16 to 20 he was in last.
Then 20.
Yeah, or maybe 17 to 21.
This is 16. So this is around May 16. So this is, I think, obviously Trump coming in, I would assume, into the election to early 17. Once Trump got in, dollar sold off. Yeah. And we were climbing that wall of worry. But then, for anyone that's followed me for a while, I've been watching this channel. We've had this dollar channel, rising channel, since 2008 crisis. This was formed in the 2008 crisis. There's the dollar sold off there, hit the lower boundary, round about there, bounced. And since then, we've just been rising in a steady sense. So, I mean, I'm looking for this lower channel at a minimum. I have seen targets of 93, 90, stuff like that. But if I was deaf and I couldn't hear anything and I'm just looking at charts, I'm thinking lower dollar here. Obviously, above 10, call it 109 or 1085 is probably what I'd class as the danger zone. So where we'd like to see it come down pretty quick. But I mean, if the daily candle closes here, that's quite a big rejection wick. Last time we saw one of them was this. We then got that sell-off.
What do we do when the fundamentals fly in the face of the charts? Because that's what we've got here. Yeah. The fundamentals really say the markets are going to be spooked, uncertainty, they're going to look for a safe haven. The safe haven will be the dollar, as it generally is. Some people are saying maybe oil. If it is the dollar, that dollar pushes higher. But we're looking at the chart and we're looking at also what the Americans actually need, which is a weaker dollar, which is what everybody needs, really. But does that stop individuals from buying dollars and pushing up the price?
I don't know. I mean, because this is the thing. So this is what. So obviously, you said some big car companies like manufacturers like Mercedes and that are down. Like, to be honest, in a macro look at things, that no one looks at Europe. Like, no one looks at the UK stock market. No one looks at the FTSE. I mean, who the hell is looking at the FTSE when you can look at NASDAQ? Now, this is NASDAQ today. So just for a bit of context, let me give you total crypto market cap. Look at that. That is what happened and has happened in the last 24 odd hours. Yeah? You then go back to TradFi world. It looks like nothing's happened. Doesn't it?
Yeah.
It looks like nothing's happened at all. You even look at the likes of Coinbase, for example.
Coinbase took a hit, didn't they? Weren't they 6% down or something like that?
I mean,
if they recover,
6%, but it's not this. It's not the big flush. Like, Coinbase has had like this candle here. What's that? A 15% day. We've had a 6. So this is why I kind of believe that they're just using this tariff headline and news purely for this liquidation to happen. There was obviously a lot of people long where they wanted to wipe on these assets. So like Bitcoin were in the lower boundaries of the range. ETH, I mean, look at ETH. And we talked about this. Was it a couple of months ago?
Last week.
Was it last week? I said that ETH could easily break this, but I reckon I could see it being a wick. And if this weekly candle closes above this diagonal line, I think you're going for highs. Because that's what we talked about. We talked about that coming out and it being just a wick, even on a monthly time frame.
You did also say though, if it was not a wick, then it was nothing but fresh air
between the previous low and the new port of support.
Yeah, so the closest area of support you've got on ETH is at 2,000-ish. But we were tagged, I mean, the low was 2,150. So we've tagged that. And if this forms, we've also talked about this head and shoulders, this forms this right shoulder, you then have a target of just shy of 8K for ETH. And if you're telling people that ETH's going to go to 8K now, they're telling you you're mental. Yeah, what the hell's wrong with you? What are you on? What have you been smoking?
Yeah.
We chop in here because at the moment, this is just obviously one day.
It's interesting that my view on it is far more severe than yours. Your view on it is a lot less severe. You're seeing it a lot less like a big event. You're seeing it more like the news of the week kind of thing. Like,
well, I'm seeing crypto land using TradFi world as an excuse to dump or to wipe some people out. I think some people have posted about 2.8 billion being wiped out and it being bigger than COVID and all this stuff. Apparently the actual figures are between 6 to 8 billion in liquidations. So that is 4 times bigger than the biggest one we've ever had. Obviously, it's because the asset class is bigger, but we understand. Get bigger and bigger, we're always going to have bigger liquidations.
Yes.
But I just think it's TradFi, crypto market maker using TradFi world as an excuse. Because, like I say, you go back to even the S&P today. I mean, you put it on a daily chart, it doesn't rely on how much has happened. There's like another day on the S&P. Like, that's today's candle. It doesn't look like anything major.
Massive. What I do like to look at is the VIX though. What's the VIX at? The volatility is at
18. So this is the VIX,
which is
pretty low. It's nothing.
it's a bit high, but it's not.
Elevated.
Yeah, but it's not. It's not as high as I'm talking about. Because today I was talking like China could decide to invade Taiwan. This could be it, guys.
I don't know. Also, I think that's kind of because we live in like Twitter bubble land. That we kind of get stuck into echo chambers, don't we? Because some of the ones that are held up really well, like this is just an example, Ondo Finance. I mean, it got slapped, but it's now positive on the day, 13%. Tau, I mean, look at that for a wick. Even the strongest of strong, Aero, I thought was one of the strongest out of all of them on base. I mean, it's positive on the day now, 10%, and only wicked down 20%. And Miggles, I mean, a $50 million market cap meme only had a pull down of 30% in that time. And is now positive 20% on the day. It's nuts. Literally nuts. SPX held up pretty well as well. You're still holding on to support here. It's not to say, I'm not saying now we're going to have that almighty rally to highs and like it's all guns blazing. But if today's candle on Bitcoin closes back up above this 99, we're probably going for another run at highs. And today we've got David Sachs doing a talk, I think at 7:30 UK time, I believe, be it in the US. President Trump's AI and crypto Kaz Sachs to host, David Sachs to host press conference on February 4th at 2:30 p.m. ET about digital assets and how America will secure its position as a leader. So that's today at 7:30. So we will probably get off a Crypto Waffle. And then all of a sudden, I mean, I'm just going to stick this out there. Obviously, a total guess. We could be trading at 110 tomorrow.
Oh, do you know what? I wish I'd have rang you this morning. I wish I'd have because I got out of bed. I looked at my ETH was down 20%. I opened my eyes. I was like, do you know what? Forget it. Yeah, done with it. I'm going down back to sleep. The week's a write-off. We've just started. The week's a write-off.
And I literally, it was so lucky that I had some of my stuff on me last night. Because otherwise I would have been telling my site manager that, mate, I've got to go home. I've got some dips to be buying. I was literally at work and I said, right, guys, I've got to do something. And went and sat in the back of the van and sorted my stuff out. So I was like, I can't. I called some really good prices. Like all my positions are up at least 20% already. So I think it depends how you view it, because I always look at it from a longer term perspective.
Yeah. And we've been saying for a while, you would like to say a great time to buy, but if prices keep on going down, it could be a better time to buy next week.
Yeah, like historically, I'll quickly share the screen here. I mean, I'm posting a market update today in the free Telegram that I have. But historically, so when we have these big wicks, so for example, during the summer, so this is the summer of last year, we had that 7-month consolidation just chopping around. Normies come into the market and they say, oh, this drop here. So Bitcoin falls from, probably see a headline, Bitcoin fell from first 57,000 down 7% to 53. They go, oh, quick, better buy, right? They miss it. It then rallies to 70k. And they're thinking, shit, I've missed the dip. Oh, I'll just get in now. Here, yeah. We can dump all the way down to 49. And they're like, oh, yeah, but I thought I missed the dip last week, but this week and they get stuck again. So the whole idea of this choppiness is to throw people off. Because people end up going, like you said this morning, they'll wake up and go, nah, I'm done with this. I'm cashing out. I'm finished. I'm never touching it again. But the thing is here, if you look historically at these wicks, so this wick here, if you'd been patient, and then so when was that wick put in? July the 5th. If you'd been patient and waited for this drawdown, you would have had a period of, say, when did this come in? 5th of August, a month. So probably a 2-week window to buy anything in that window there. Because we completely covered this wick. We actually went lower than that wick. And the same with this wick. If people thought they missed this wick, if they had been patient, they would have actually got a retrace from the local high of about, 20%? And I mean, okay, you didn't catch the lows of this wick, but you still managed to get within a 5% of that low, even if you did buy here or here. So the key is now, and it wouldn't surprise me if we do it again, is yes, like I said earlier, we could go to 110 today. We could go all the way up here. But I think with a bit of patience, we may come down here. It's not to say we cover the low of this wick. It's not to say we go all the way down and new lows. But the highly likelihood is that we come back down to maybe at least 94, 93, something like that in Bitcoin. And in total crypto market cap, we maybe come back down to the lows of this range again. So on some of these assets like Ondo, maybe we come back into like here again. We don't have to have and cover that wick. We don't have to. But there's a high likelihood that we definitely go back into some of the wick. So if you want orders, place them within the wick around local supports. But it should be an easy pickup.
It's like, you make it sound so easy.
To me, honestly, I always have it from a longer term view. And the underlying fundamentals for me is we just had kind of Canada, I think last week, pause their quantitative tightening. So they're now not taking money out of the system. I know it's only Canada and it means literally probably nothing to the world of liquidity, but it's a start. And once goes, they normally follow. It was the same when people started cutting rates. I think Canada was the first to cut rates, or Brazil was, or something like that. And then all of a sudden, everyone followed.
Then everyone does it, yeah.
Yeah. You've got the Fed cutting now. There's only apparently, well, from what I saw the other day on Poly Market, it's only priced in that Fed are only going to cut once this year. I see that being wrong.
Is there a Poly Market? Is there on Trump delivering tariffs to Europe?
Don't know. Probably.
Let's see what Poly Market says. Because Poly Market is generally right. German parliament winners. Okay, so it's German election year this year. Poly Market thinks no change from the Fed, and China won't invade Taiwan. No, I can't
see about tariffs.
No, I can't see anything about. Let me write the word tariffs in, actually. Here we go. No, Mexico, China, Canada. Trump removed the tariff on Canada before March. Chances are no. Trump removed the tariff on Mexico before March. Chances are no.
Well, I mean, he's got a month to discuss on the Mexican one, so it wouldn't surprise us. They're going to come back with something similar to the Canadian one. And then it would be till March, wouldn't it? When to sort it out.
Yeah, March is too soon, isn't it? Really?
Yeah.
March
I'll quickly, before we get away from charts and go into portfolio management, I just want to do a couple of victory laps. So I want to share my screen again. So over the last couple of weeks to probably a month, I've been talking about FXM, one of your favorites.
Yeah.
It's in the head and shoulders top against Sol. And it's now complete. We came down to that perfect level, and we've seen what we want to see from buyers, which is a bounce. So we can now get rid of that.
Can I go and buy FXN now?
Yes. Because you're buying, if you're looking... So this is the other thing. So a lot of people go, yes, but you just said it. People might be staying in the chat now. You've just said that if we have a bit of patience, we might go a little bit lower. Yeah, sure, we might. But you are now buying at 89% discount from the high? Or even if you went from the local high, so a couple of days ago, you are now buying at a discount of 60%. You're telling me if you walk into a shop and you see a nice pair of trainers that are 60% off that you like, that you ain't going to buy them? Of course you are. Like, you're just going to do that. It's like ARK. So, for example, this is one of my AI picks. This is one of the things that I was snapping up last night. And I'm now up 50% on the day. I mean, it's ridiculous. A couple of days ago, I bought in here. It's in this broadening wedge pattern. I mean, originally, I thought it was in maybe some sort of rising channel like this. And
did I tell you about ARK?
Pardon?
Did I tell you about Arc? Arc's one of mine as well.
I'm not actually sure. You might have done. I don't know.
I like Arc. Arc is like AI16Z for Rust. Arc has got good fundamentals.
Yeah, it's Rust, isn't it? All the stuff on. Yeah. Because I saw this breakdown from the channel here. So what you can play, it's a dangerous game to play if you don't know what you're doing, but you could sell your asset here. So say on the 4 hour, you could sell your assets on the break. You then let it break down and you then look to buy back lower to increase your holdings. So I saw this and I was like, right, I don't want to play that game. I'm not risking my bag just for an extra 5% drop. So if you've got capital on the side, you wait for the break, you let it come down, then you add. See, now this would be classed as a bearish retest against this rising channel. So you'd look for it to get to rejected to come back down again. But the other thing I'm looking at is what you call a broadening wedge. So if this broadening wedge is to play out, we could potentially see ARC now go to all-time highs of about 80 cents. Now, we know that could happen literally over a period of 2 days. Like, it could happen tonight if David Sachs says something about AI or all the other things.
Well, he will, because remember, he is the AI and crypto czar.
So he is a mixture of the two.
Yeah.
And I listen to his podcast religiously where he talks this, that, and the other.
He's not in podcast.
Yeah, he's not massive on crypto like Chamath. Chamath's massive on crypto, but he is quite big on AI. Yeah. So there's a good chance, as he's got that role, that he says something about AI crypto.
Yeah. So the other one I was looking at, and I want to do a victory lap on, is GOAT. So we talked about a big head and shoulders on GOAT ages ago. When I said go all the way back to 250 million. It's got even past that. It's now at 142 after peaking out at, I think, what was it, 104 billion? Something like that.
Yeah, 1.4. It was 1.4, weren't it?
Nuts. So back to all-time highs here. Oh, that's not it. Back to all-time highs. You're looking at an 8x. Like, it's crazy.
Does GOAT reclaim all-time highs, or are we seeing
a very for advantage? It was the first Twitter bot to be automated, and yes, it chats absolute crap. That's very for advantage. You only have to look at the likes of Doge. It's got first mover advantage. It was a dog.
Coin or big cat. First mover advantage. Okay. So what we're saying about AI16Z, another one of my pain points.
16Z, falling wedge. First area of support was here. We didn't see any buyers step in. We've seen some setting now. But ultimately, I think you could come down here. But there's no banking on that. And what I was doing personally last night, I was buying this. Because I know full well we could have another 50, 60% drop in here. Right? But with my personal background, obviously I'm still earning money in 9 to 5. I will have liquidity when and if it comes down here, or should have liquidity. Okay? But my upside to here, obviously, because where we think this can go, is minimum to where it is at all-time highs, which is a 5x, to probably beyond to $5, $6, wherever it is. So the risk to me, not owning some here or picking some up here, is having none at all. I'd rather get in here and be sat for a 50% correction than own nothing. So I would not bank on that coming down here, but I'm more than happy to start buying here, which is what I did yesterday. I think I picked some up at 0.31 or something like that. Well, it can't have been that, but in there, I picked some up. And then the only other one I wanted to talk about was virtuals. Nailed this as well. So this just loads. I think we had a head and shoulders top on it. No, I must have got rid of the drawing, but you can see it there. Head, shoulder, shoulder. Then you had your neckline coming across there. You take your measured move. Oh. You then move that to your breakdown. Bang. So support. This is what you want to see. This is the sort of price action that you want to see.
So on that, you think that we can get virtuals down to $1? There's a good chance.
I mean, remember this is virtuals against ETH. So if we go to
okay,
virtuals against dollar, so Gate.io, use this one. We wicked down to $1.04. So it's pretty similar. But if we lose this, so call it there, your next support is down here, 55 cents.
that's where I first saw it, 50 cents.
And really, you want this to be holding here. And to be fair, it's not a bad spot to buy, because if you go from the high, you're buying at a 70% discount. Right. You can't knock yourself for maybe adding a little bit here. Because if you think, like I just said a minute ago with AI16Z, if you think this space, or like me and you both think this AI space, especially these assets, are probably going to 5 billion plus, we know Virtuals has already been there. Right. It peaked out at, what was that, 514? Right. The upside is greater than your downside here. In all aspects.
Remove the emotion,
Yeah.
and it all becomes quite
Normal.
easy. Yeah, and it all becomes quite easy.
Yeah. Because this is what I was saying to one of the clients the other day. I was like, I now get bored when prices just keep rising, and I want chaos. I love it when Twitter's popping off. And I mean, I saw a message today in one of the Telegram chats. I mean, the guy's obviously made some money, but he said, guys, I've completely cashed out this cycle. I'm now going living off grid. Thank you for everything you've done, this, that, and the other. So he's obviously made some money, but I also see that as a capitulation, and also people being, having PTSD from last cycle.
Yeah.
Thinking it's done. And we've got to remember, there was between 6 and 8 billion liquidated last night. There's going to be a lot of people that had nothing left. Like, if they were trading leverage, you're done.
Yeah.
Your portfolio is done. Whereas where you sit in spot, yes, it's not very nice in your portfolio down, 30, 40, 50% in a day. But at least it's not gone.
It's not gone, yeah.
Yeah. It's still there, and you know fully well that those assets were trading at 4 times the price a couple months ago.
Yeah, yeah. What do you think can be the bullish catalyst to get prices back to where they were at the start of the year?
They did tax, depending on what he says. I mean, if he has a bit of a broader discussion on what their strategic Bitcoin reserve or whatever it is, because I mean, when they released that the other day, it was kind of like a basket of assets. They weren't sure.
And I think they said they were going to put together a committee, didn't they? So they said,
So if there's a bit more clarity on that and what it involves, and I think that will be good. Obviously, you've got people filing for Dogecoin ETFs, Solana ETFs, stuff like that. But then also, a lot of it's macro land as well. It hasn't got to be just news narratives. But I know Arthur Hayes has been tweeting a lot recently, and things. I don't know if I mentioned this last week, or if it come out this week. He reckons the Fed is basically making their own mini financial crisis, which then gives them the opportunity to put the money and refinance the debt, which it wouldn't surprise me. Like in the UK, I've talked about cyber attacks. Barclays was down for 3 days over the weekend.
You said it. And people were going and taking free money from the cash point.
Yeah, it's nuts. But it's not that, it doesn't have to be one of these big, massive events. But it hasn't got to be like COVID, where the whole world shut down. It can be lots of these little things, but because Barclays being down will create other pressure on other banks. Because people are then going to run to their other banks that they've got. Because anyone that's got one bank, I think you're quite stupid having just one. Need 4 or 5. And this is what I was saying to the guys about the cyber attacks. I was saying, look, I could probably be wrong. If I were you, I'd have a bit of cash. Like, just get that bit of cash. Because if you can't get access to your bank account and you've got bills that needed to be paid or whatever, at least you could call someone up and say, look, I've actually got cash I can give you.
Yeah.
But if you've got no online banking, you're screwed.
Yeah.
So these little areas of pressure, obviously not to say Barclays was a big deal because it's the UK. It's not like it's America. If that was JP Morgan down, I'm sure that would be
I do think
Which
that sometimes these smaller places can be the first domino. Like you said, Canada, interest rate.
it creates that little bit of pressure on something a little bit bigger, and then that will go, and it just keeps exaggerating itself.
Yeah.
So, I mean, but in times like this, it's, I think, very important to step back, zoom out. And if you haven't caught some prices at the lower end of those wicks, don't go running in now thinking, oh, I've got to get it all in. But if you've got some liquidity sitting on the side, add a little bit here. And as I showed you earlier, if history normally repeats itself, if it does, there's a high likelihood that we come back down to where we are now, if not a little bit lower. And you can pick up some more assets, but you just have to have that. Because the other thing is, a lot of people don't have a shopping list ready. They won't be ready to buy this stuff. When it happens, they're panicking. So they're just getting on their app and they're smashing buttons. They're like, yeah, like that, and that, and that. And before you know it, you're like, oh crap, I didn't realize that was down. Oh, I didn't see that was down 40%. Yeah. So you've got to have an idea of what you want to buy in these scenarios.
Okay.
It's hard, isn't it?
Let's talk shopping lists then. What is on your shopping list? I know that's the sort of thing that people like to hear. What are the 4 assets that you have?
So
You went to first. As soon as you woke up this morning, you was at work and you see,
well, unfortunately, I'm bold.
everything is going down. What was the first 4 things, first 4 assets you thought, right, let me go and have a look at these boys?
Yeah, just before that, we have got some comments I just want to quickly address. Michael Jones, you said what coins were we looking at? We were looking at FXN, Go, Virtuals, and ARC. That was just some victory laps because I was pointing out some head and shoulders and target prices. Other countries have already said they would do it as well. I'm not sure what that's relating to, maybe tariffs.
To respond, retaliate.
Yeah, and then he's also saying that I could heard Bankley's had an error and people can withdraw money. Yeah, which they couldn't. And I know my brother was affected because his salary gets paid into Barclays. He gets salary for 2-3 days.
I saw it on TikTok. People saying, oh, if you've gone and taken the infinite money glitch from Barclays, you're going to get a charge back.
And there's no actual stores nowadays. It's not like you can go and do anything. Fine. I'll pop down to the local Barclays branch.
I don't think we have one in the town that I live in. I don't think there is even a Barclays here.
Yeah. So shopping list wise,
yeah,
I picked up my first go-to last night was Aero because I saw Aero 1 being a strong asset. It was holding up very well when the likes of XRP and HBAR and these other ones that have been strong around 20% 25.
Like, what is, you got to let people know, what is Aerodrome and why do you like it?
Aerodrome. So as if people have been watching for a while, we both and myself like Base. Base is a layer 2 built on Ethereum. And within that ecosystem, you have all sorts of things. You have DeFi, you have memes, like toolkits, meme builders, there's all sorts. So, but Aerodrome is one of these DeFi plays on Base. It has actually been one of the best performing DeFi things alongside Aave and I think Uniswap over the last, 3-4 months. The second thing I was looking at was also on Base was Mr. Miggles. Again, a meme coin, which I thought would be down 40, maybe 50%, was only down like 24 at the time. And I was like, Christ, that's held up strong. And I was like, right, I'll have some of that here. So Aero and Miggles are my first ones. Second ones, Ton. So the Ton blockchain, I still haven't faded that. Now, I know the memes have been smashed and my Ton memes are down big. But I have been accumulating Ton with profits from XRP, HBAR, stuff like that. And Ton literally smashed down last night from around $4.20 all the way down to $2.92. I actually picked some up at $2.95 and $3.20. So those positions are both up approximately 30% as of current. Second one I picked up was Render as well on Solana. That got smashed.
Render being an AI play, I guess it's really completely.
While I look at it, so obviously if you still want exposure to Sol but without holding Sol, thinking it's not good enough for you, like I do, I'm probably completely wrong on the way I'm looking at it, but I was looking at Sol betas, so Render, Pith, Jupiter, Radium.
So the reason why you wouldn't like Sol, for example, is because with Sol, it's already a big asset market cap wise. So the chances of it doing a 10x are a lot lower than the chances of
Realistically, I only see Sol maybe going to 1,000 at most. So that from here is what, a 4x, 5x-ish. That to me doesn't cut it. I need a bit more than that. I mean, I'm happy to have a 5x. Don't get me wrong. I'm not being ungrateful. I'm more than happy it's such a 5x. But if I can go slightly further out on the risk curve, I will do so. Obviously, there's that risk involved. The token may die. It may go to zero. But they were the main four I picked up. There was a bit of Render, Miggles, Aero, and I'll just check my other exchange. No, and ARC and AI16Z. They were the other two. So, yeah, they were my main buys of last night. A couple other things like a bit of ICP, some Curve as well. But they were the bigger positions.
So in this market, your portfolio, you're not selling. You're not moving into stable assets. You're accumulating more.
No. I mean, I had some stables from where, like I said earlier, that likes of HBAR, XRP, Algorand, stuff like that were hitting TPs when was that? Let me get a little chart quick. So that was back in December. So towards the end of the year last year or Q4 last year. That's when XRP, Algorand, Cardano, HBAR, all of them were flying. And they were at 2p's. So I'm very strict with that sort of stuff. I started trimming. I'm selling. That's why I had some stables on hand as well. Obviously, I've had stables from my 9 to 5 as well. But yeah, I deployed some of that. I've got some more on the side. I haven't got much left because I think I managed to catch the knives, so to say, quite well. Obviously, not to say that we're going to go down there again, which if we do, then happy days. I'm not going to cry over it.
So let's talk worst case scenario. What if you're completely wrong on the macro and this is the start of major tariff wars and a real broader capitulation in equities and risk assets?
So top is in sort of scenario.
Top is in. Let's say for the next 6 months, I guess. It can't be the end of the world, can it? Surely. No.
And Bitcoin, it goes down to that worst case scenario where we've talked about it going, which is what, low 80s, yeah, 70s, something like that. It's not the end of the world for me. I still work a 9 to 5. I've got some income. And if I still have conviction in those assets, then what do? I do DSD again. I just keep DCAing it and you buying that stuff. I mean, I wore this hat today because it stands for don't fuck this up. So in moments like this, do not shit the bed. Because if you're holding spot, like we said earlier, if you're holding leverage, you're probably gone. Your whole lot's finished. But if you're holding spot, it's perfect. You can just sit in it. I mean, don't be wrong. It's hard to sit there and watch your money just fall 20, 30% in a matter of hours. I think last night was the biggest 24-hour period I've ever seen my portfolio down. But it was weird because I kind of felt the most excited I've ever felt just to add more. It sounds nuts. Kind of an inverse correlation. When you're scared of something, that's when you want to be going in. And when you're really happy about something, that's when you want to be taking something out. So, portfolio management here is, like you said earlier, it's having a shopping list, being prepared for this stuff. And if you ultimately still have conviction in your plays, then you should know what you should be doing. And if you don't, then stop.
Then it is what it is. If you don't know, then you don't know anyway.
Yeah. I mean, how would you, because obviously if people have been following us for a couple of weeks, they know that one of your bigger barriers was AI16Z. Obviously that's down pretty bad. How are you handling that at the minute?
I'm out of AI16Z, sold AI16Z.
You took a hit?
At a massive hit, 60, 70% hit. Sold it at around 50 odd cents. And that was at the start of the weekend. Just knowing that the Tariffs thing was coming in, and I just thought, right, I don't want to be sitting here in this bloody stable, in this AI play that is a leverage play that is already down. That is one that will get hammered more. So I was like, you know what, I'll get out of this and I'll get back if
We looked at the charts. If it touches 20, I'll get straight back in. We got down to, I think we was high 20s, low 30s. Now it's back at 40s. So now I'm looking, considering maybe I just get back in now, because
you've done effectively what I said a minute ago, where you can sell your bag high, go back in lower, and you acquire more of the asset. So
because I don't see that this downward trend
change in any time soon. I don't think we're through the worst of the pain. Having said that, I think this cycle is probably different to any cycle we've ever had before, with Bitcoin dominance being so high, so far into the cycle. Normally, Bitcoin dominance started to fall away by now, but like, we've had this terrible day, and I'm shocked. I'm looking at the price, and the price, we're probably going to go past 100 as we talk.
It peaked 64.33%. Yeah. But when we have, and again, I've put this out today on my free thing. I haven't uploaded the video yet, but it will be out later. Just share my screen quickly. You have a double topper play. So I talked about for weeks. Let me just remove that. I talked about for weeks Bitcoin in this kind of wedge pattern here. I said if we break to the upside, we could definitely go to where the prior highs were. We did initially yesterday on the Sunday, and we got rejected. Obviously, then we've had these liquidations, which caused the dominance to spike again. But if today's candles close again, or below these prior highs over here, so call it 61.5, that could be a double top. And Bitcoin saw a double top last year. This effectively was a bigger macro double top.
A lot longer time period though between those two.
Obviously a lot longer time period. And also another thing, so this is a little bit of a don't teach them how to make money, teach them how to fish sort of thing. If you go to say BTC/XRP, or you look at charts that are against Bitcoin, actually I'll do the other way around, XRP/BTC, most altcoins will double bottom or have a double bottom against their Bitcoin pair before rallying. XRP is a perfect example of that. I believe one that is doing this now could be Jupiter. No, it's not the one. I'll put it on here. Jupiter. There we go. I think Jupiter could be putting in a bigger double bottom over here. Or if you go to the daily, the double bottom there. These things, this is what I'm looking out for on BTC charts. I thought AI16Z could be putting one here, which has obviously failed. So that now opens up down here for that. Render, I thought could be doing one. Hasn't worked. But it could be looking at this area here. So when you're looking at alts to rally, look at their BTC pairs as well. So a little tip. So when stuff looks to move, XRP is a great example of that. You have this lovely double bottom before the explosion. So it's just something to look out for if you do look at charts and whatnot.
If you have a double bottom, you'd consider it bullish. If you have a double top, would you consider it bearish?
Bearish. Okay, so a Bitcoin double top is not a good thing.
That was Bitcoin dominance double top, wasn't it?
Yeah. Oh,
yes, of course. So that is a good thing then.
Yes. Or see if we go back to the chart, we click on Bitcoin dominance. It could potentially be a double top. I'm not saying it is. It could. We probably need a couple more days to close first to see where we actually end up. And ultimately, I'd probably like to see a weekly close to see how this fares out. But that could be a double top. And also, if you look at USDT dominance, so this is the dollar dominance basically of Tether. We have fallen off, and I've covered this for a while now. We had this long-standing, just rising strength of the dollar or USDT in the space from 2018 to 22. This now we're having a macro shift into what you call a USDT bear market, effectively, is great for risk assets. And this works inversely, a bit like a bit like Bitcoin dominance. So where Bitcoin dominance goes up, market or alts will probably go down. The US DT tether dominance goes up. Everything gets smashed in against their dollar value. Like everything will get smashed because people are selling their assets to buy dollars effectively. And when this is going down, people are selling their dollars to buy assets. Now, the only skew with this is that whenever they print more tether, it makes it harder for the chart to do what charts do and show you what's actually happening. But as far as I'm concerned at the minute with this, you've got a potential head and shoulders top here. Okay, so you had your left shoulder here. This is your big head. That's your big right shoulder. And we could go around to the 1.5. I'm targeting this yellow box for this cycle or 2025. And at the moment, there's an argument to say that this is a bear flag. I mean, you had a small rising wedge here, which ultimately failed to the downside. There's an argument to say you could be in another one now. But ultimately failed to the downside. And there's also an argument to say that you're in a wedge from this angle. So here, 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 we could bounce back up here, then come down again. So there's all these scenarios that you've got to look at. See, that's just all chart analysis wise, no fundamentals involved there at all. But this break here, I believe, and this rejection was the telltale sign that this is going to be an explosive time. And that broke in Feb 24, and we had that reject to the retest in late August, which is what that drop there is what got us to that 100K from that 70, that range between 49 to 72 or whatever it was.
Chart-wise or otherwise, what's your predictions for February? How do you think February's going to pan out?
I'm bullish.
Yeah, upwards.
I think it's this Friday, so we have jobs data coming out. Unemployment rate, I think it is actually. So I believe, and this is from Benjamin Cohen, you've probably heard of him. He also reckons the same thing. This is where I kind of got it from, and from somewhere else on Twitter. So obviously, when I'm doing my research, I listen to a lot of opinions, then piece together my own thing with pinches of salt from everyone. But I'm leaning towards Benjamin Cohen's thesis at the minute. That is, this jobs data, or unemployment rate, sorry, if we print between 4.1 to 2, that is bullish, and we should see Bitcoin rally. Alts follow, obviously. And if we get a surprise to the downside or a surprise to the upside, we should probably see Bitcoin chop sideways to down. And I think just a continuous slow bleed in alts until whatever happens. But you got to remember that is short-term noise. At the end of the day, unless we've had anything or any central banks come out saying, look, we're never going to QE again, sort of thing, then there's no reason to be bearish. My eyes. But that's what you got to have to try and remember. So obviously people have got to remember how this system works. And that's one thing in itself. Like if people don't understand that they actually print money, they're going to be going, yeah, but what if China this? What if the US bans it? They could ban it all they want. They're printing money. It's irrelevant. So it depends how you look at it and obviously what you believe in and your macro view.
It's always putting things into perspective, right? So there's all these different factors that are, okay, Trump tariffs on one hand, China bans Bitcoin on the other hand, the AI czar is going to speak. And then you just got to put these things into perspective. And I think, which we're interested in today, was you're the first person I've spoken to who has put the perspective of the tariffs into a smaller box, whereas I was put into a massive box. So if you get the perspective wrong, you can get it all wrong. So, for example, 4chain at the moment, I don't know if you've heard about 4chain. Right?
I don't know really what's happened, but I just saw the chart been hammered.
Right. So 4chain have had a situation which is not too dissimilar to what happened with, what were they called? The other one that broke, Terra Luna last year. So they had an idea similar to that, whereby they were allowing people to borrow on their L1 and borrow against Luna or borrow against BTC.
and not have to pay the interest. We've just passed $100,000, by the way, on Binance.
Literally is. As this guy. Just gone back past 100,000.
Talk about a roller coaster.
Oh, mate. And okay, so they've gone and done that, and it's all falling apart, because if BTC outperforms, then obviously they don't have the money to pay back unless you liquidate the price of Rune, etc., etc. So that's all happened, and the prices have fallen. Now, some people are kind of saying, well, if we get out of this, then it's really bullish for the price. And you kind of have to put it into perspective of what's happening in the broader horizon.
So here, sort of thing. So I mean,
Probably 70.
yeah. So your upside, it's a good bet. Obviously, if you understand the fundamentals as well, which is, I think we've discussed this before. Like when that Terra Luna crash happened, I didn't have a clue what was going on. My initial reaction was, if they rescue this, my upside is massive. So I can't remember what it was at the time, maybe 100, 200 quid in. I mean, that's worth literally zero now.
Yeah. I done exactly the same, but with Terra Luna, it was a little bit different because I did understand that one. So I had tweeted beforehand and said, this is not going to work for the same reason with Thor. But with Thor, I just can't remember the exact mechanics of it. But basically, you end up with a death spiral where, to support the price of your stable coin, you end up having to sell the token, but then you have to sell more of the token to support the price as the price goes down. So you're in a death spiral. I said this is what will happen, and yeah, they slaughtered me for it. But then it turned out to happen. But even though I knew that, and I knew it didn't work mathematically, I was still like, do you know what? It's down. The stable coin is down to like 30 cents or something. Might as well have a go. If they manage to stabilize it again, then I've tripled my money. So
You're doing a favour.
yeah. So I had to go at that as well. But it didn't work out. But it's worth a go.
All right.
No, so shall we do our predictions so we can get off before?
Well, I was going to say, you still haven't done DeFi shallow dive.
We'll do that next week.
Yeah?
I keep saying it, yeah.
One thing I do want to quickly go over. So do you know we were looking at this a while back? So we were looking at this Bitcoin liquidity chart, weren't we? Looking at Bitcoin liquidity chart and saying, right, this could take Bitcoin down to what we said, around these low 70s, maybe in 60s to low 80s. I think we've been looking at it on the wrong chart. So I've been looking at this today against ETH. Okay. I think obviously Bitcoin has been in its own game this year. So everyone's been saying this cycle is different, right? And yes, we know it's different because we now have BlackRock and institutions here, which is why I believe Bitcoin has stayed bid. It's in a different asset class compared to other cryptos. There's not the sort of thing, there's not the underlying bid that there is for, say, ETH and all these other stuff. Like Bitcoin is the one in TradFi world at the minute that everyone's on about. I think we were technically correct saying we would see this big liquidation or big coming down, but we were just looking at the wrong asset and saying it. So I think if we'd overlaid it like I have here, so this is liquidity in ETH, and said, right, we could see altcoins here have a big drop.
Yeah.
We would have been
Right to the T.
spot on. Well, what that does say is that the drop's not over. So we're going to get a bit of recovery.
In the short term, liquidity looks at the moment to have bottomed. And I mean, I'm not one to do technical analysis on a liquidity chart, but I mean, that could be some sorts. You could say that you actually have support. Ignore that. That's complete rubbish. You could say you could have support going along there. You have a bottom here. You have support here and here. There's an argument to say. I'm not sure if that works. I've never done it on that before. But I think looking at that from a different perspective over a different asset at the time when we did that, we could have been spot on. Obviously, we didn't, so we can't take any.
Retroactively take credit for the.
Yeah, I didn't even think of it till today, and I was like, you throw this liquidity chart out, and then obviously it looked like it's bottoming, stuff like that. But what do?
It's in
Nice little.
No, that's interesting. Right, let's do our predictions, guys.
I want to get away and see what David Sachs got to say.
Yeah. So last week, Bitcoin first up, I said 106 and you said 108. We actually went to a high of 106.5 on this Bitstamp chart. So I was correct there, and you were small amount off. I think it's valid. I think anything within 2 or 3K is probably a pretty good guess. Ethereum, we said 3.3, both of us. It actually went to 3.4. So both right there.
But well, it's currently at 2.7 though, unfortunately.
Unfortunately, but we still got it right. We still got the direction. With, I said 130. You said 90 cents. We were both correct. It went to a low of 87 cents and a high of 137. So,
yeah, but so last week, I guess I was relatively bearish on some things, weren't I? I was relatively bearish on the memes. So that's why that one's turned. That's why I've got that one. Oh no. We've lost the financial navigator. Or has he lost me? Right, so financial navigator's laptop has died. So whilst he's not here, seeing as I've got your attention in between, I will go for the older. I'm going to show a quick DeFi shallow dive. So what I want you to do will show people what you can do with your crypto when you're just holding on to it. Some things that you can do to kind of make some money at the side, make your crypto work for you. So what I like to do when I'm not watching this is I like to go to, today I'm going to show you how to do my emperors with no clothes, pancake swap. So I'm going to show you how to add liquidity to DEXs. So this is how this works. You add your liquidity to the DEX. Now, any trades that happen between the pair that you've added liquidity to, you get the fees. So what I'm going to do is connect my wallet. It's all pretty simple, but yeah, you can't see that part. What I'm going to do is connect my wallet, and then we'll go to these things. And here you've got, like, you can put USDT and WBNB, and you will get 100% per year. So these APRs are very high. But obviously, it's kind of high risk because you're not only worrying about the price of one asset, you're worried about the price of two assets. So if USDT goes to zero, you end up with a whole heap of USDT and no BTCB. BTCB goes to zero, you end up with a whole heap of BTCB and no USDT. I think USDT BTCB at 135% is magic. That's brilliant. We have to look at what network it's on. Okay, that's fine. That's a good network for it to be on. These APRs are all very high at the moment because there's been a lot of trading over the last 24 hours. Generally, these wouldn't be this high. I'm going to sort them by APR. So you can see some of them are ridiculously high, but then you check the total value locked. And if it's tiny like that, then these are just scam pairs. So you won't be able to do those anyway. So we need one that's got at least $100,000 locked. You can choose it by chain as well. So let's have it just be on BNB chain. XRP USDT looks like a good one. Or Toncoin. We'll do Toncoin, US and WBNB. So first things we have to do is check our portfolio and what tokens we actually have. I don't have much. I don't have enough there. Let me try on base. Okay, we'll do it on base because on base I've got a bit more money. So let's go to base and let's see what's the best pair to have on base. There's all of these scam pairs.
A lot of nonsense here. Okay, here's the best one. Weave and Aero. So what I need is half of Weave and half of Aero. So what I then go and do is I go to trade and I click on swap. And I have 0.15 ETH. So let's swap that, half of that into Aero, which is AERO. Aerodrome. Should be back by now. I don't know where Financial Navigator is. I'll do 0.7. Okay, 0.07 is correct. We'll swap that into Aero. We'll confirm that swap. So what we need to do is we're going to have half of the value in Aero, half of the value in wrapped ETH, and we're going to put all of that into a thing, and then we'll be earning that APY every week or whatever. So that's one. I'll add Aero to my wallet. You can't see my MetaMask popping up, but it is. And then I want to swap this ETH for wrapped ETH, which should be free. So the 0.7 ETH, 0.07, sorry, ETH for wrapped ETH. So let's wrap that up. Confirm. Okay. That's done. Then we go back here and we look for let's type Aero, because we know it's Aero, and there's our one. Oh, we could have done USDC Aero for more, but that's a fake one. So we go here, we click on add liquidity. Should we leave the range as it is? No, we'll click the range for 10%. The higher percentage means the least chance is that you'll go out of range. So if the price of Aero drops by 20% or Weave drops by 20%, or their correlation spreads by more than 20%, you will be out of reach. You'll be out of range. So you will not earn any fees. So you want to have it as wide as possible within reason. I'm going to go for 10% because I think these two assets kind of will move together. Weave will go up as Aero goes up and vice versa. So I'll keep it at 10%. I will then put in the max of Weave, which equals the max of Aero. I then have to enable the two, and it shows me what my APR will be. 350%, which is mostly going to be in fees. So it will end up being a little bit less than that because we're doing this at a high trading time at the moment. So we will click to enable. This just allows the smart contracts to use your tokens. Then we'll click on add. And then we'll click on add. It's this simple. And we should be getting 384% per year. Give or take, it will fluctuate. But you compare that to putting your money in the bank, and it's almost no comparison. Sometimes takes a little while. Oh, it's asking me to confirm the transaction in my wallet, but there is no transaction in my wallet. Something's up. Okay, let's do it the other way around. Or has it been done?
Okay. For whatever reason, it's not worked. So we'll try it one last time. If it doesn't work this time, we'll wrap the show. Because, like I said, I wanted to go and see what David Sachs got to say. So we'll try again. We will go Aero. Petitions, so I don't know if any positions. Gero. Don't say X. Okay. Sometimes you have little issues like that. Okay, so we've added liquidity. It's done. Now, if we come back here, check my positions, it will show my position here. The last thing you need to do really is click on stake. This will add a decent amount. It did say that the LP, the farm fee, which is this part, will be 30%, something like that. So if we check here, we keep checking it consistently. Over a period of time, you will get these unclaimed fees. This should go up. Obviously, we're getting 400% per year, which will turn this $300 or $400 into, I don't know, I guess 1,500, something like that. Just click on collect, maybe weekly or something like that. There'll be a nice little, I don't know, $20, $30 in there every week for you, depending on how much you put in. The more you put in. Now, obviously, the risks is that Aero goes down a significant amount or ETH goes down a significant amount. But if you do have a portfolio where you're holding these two things, you're better off holding them and providing liquidity than you are just holding them. So there you go. That's how you do it. I guess that ends this episode. Unfortunately, the Financial Navigator got cut off, but I think we covered some really good ground, and it was a really good example of how having different mindsets can get you to a different place. Because now I'm feeling a lot more bullish about February, going into February after that. So like, subscribe, all of that good stuff. Make sure you share this with your friends who may also be a little bit worried about the current state of the market. And until the next time, I've been Cryptosi. He was the Financial Navigator. And this was Crypto Waffle. And I will see you later.